All right, believe we're live. Welcome everybody into live valuation. I'm Midas Moriarty. Just give me a moment and get everything set up in the right place. We will get started. Okay. So today we're going to be taking a look at BHP Group. But before we do that, I kind of want to go back and take a look at Interfor, which is a company we looked at a few sessions ago. There was a problem with formulas in here in my spreadsheet, and so there was an issue once I converted the currency from Canadian dollars back into USD dollars at the end of the valuation. I went and converted it back, and it basically took all the return away, and I just took that as being the currency difference. But there was actually a problem in here because I was converting the currency at this end of the valuation, which is basically the start of it, where I create the market cap based on the home currency because the cash flows are in that currency. And then I do most of the valuation all the way through the whole process. It spits out the valuations out here. And at this point, I convert it back into USD. Problem with that is that up listed up here, I had the price formula listed directly to the price at the top, so it wasn't listed correctly. See, like it should have been different. This is the price in Canadian dollars currently, and this is the price in USD dollars currently. But I had them being the same, and the problem with that is because then on the summary page, this price, which is the current price, feeds in actually from that spot right there. And so I had the Canadian price right here matched up against projected future USD prices. And so that had taken all the returns away. So incidentally, once I figured that out, figured that out after looking at a few other foreign currency stocks, because I've been looking on diving much more into some foreign markets for looking for opportunities. I was kind of redesigning some aspects of my spreadsheet, specifically around how the share count setup works, so that I could have a more customized ADS/ADR kind of system for each year, because I had these issues with Alibaba, for example. So I was trying to like fix my template to actually have these issues put in place, as well as a place for me to automatically switch out the US Treasury for whatever home currency treasury that I might be using instead, because that's also a relevant factor. So there were some things that needed fixing, as well as I had been making some changes to like how I calculated the debt to equity and debt financing as a percentage of total capital ratios. I had some issues with that too. So there was a few little minor changes I needed to make to my spreadsheet, and so I finally fixed those things out together. But the point is, I needed to go back and correct it on Interfor, which is still in the older spreadsheet. You can kind of see the difference of it when I click between them automatically. So either way, the point is that Interfor actually looks way more appealing than I had thought at that point in time. So I actually added a small position of Interfor today. It is a commodity company focusing on lumber. Lumber is in free fall right now from its highs, though it is still at elevated levels. So the point is it's easy to see lumber taking a much deeper dive right now. So I definitely took a small bite with intentions of building the position to many multiples that size over the course of several months, because it wouldn't surprise me to see lumber prices go down. I don't know, 50-75% even from the current level. Probably nowhere in 50%, I'd imagine, but you gotta prepare for the worst. So the point is yeah, I did take a bite on Interfor actually today, and we'll probably be building that position up, but it's definitely going to be remaining a small position anyway. So we will move on to BHP Group, which we will have sort of the same issue, or actually, well, wait a minute. No, we won't have that issue with BHP Group, even though this is an Australian company and is an ADS. But if do I remember correctly, this one has only its cash flows listed in US millions. And see, that's the thing where this comes down to is what are the cash flows listed in. For example, really, really major foreign companies like Alibaba, for example, they will give you their cash flows in both USD and in Chinese yuan. So you can take your pick with a very, very large company like that, but a much more smaller company, it can be questionable. Like Interfor is a pretty small company, so that's part of the reason that's in question. BHP Group is a very large company, so you might think, oh well, they'd be able to put it in Australian dollars, but the reason why they're probably doing it in USD and they don't even list it in their financial statements in Australian dollars is because they probably only get a small percentage of it in Australian dollars, and it's probably easier for them to receive USD dollars because of how international their business is, because they're a commodity company. So they receive a huge percentage of their revenues from China, from the rest of Asia, except they're an Australian company, so they receive most of their revenues from that half of the world, but it's in commodities, so it's in a lot of the emerging markets that are very, very hungry for commodities. So it's probably actually pretty simple for them to receive USD, just because of the mass of international players, all of which have USD foreign reserves to be able to purchase those things. So I mean, it's simple enough for them to put it in USD. So as a result of that, we actually don't need to do a conversion for BHP, even though it is an Australian listed company. And this is the US ADS that we're looking at, but it's still, the cash flows are going to be in USD to begin with. So we don't actually need to convert at the end, which means we don't need to do anything here. But we did fix that so that if I did have to convert, say for some reason it was some random currency to 75%, it is set to convert things correctly. Okay, so we will move on to the actual formulas stuff. I already did the segmentation information. They get 56% of the revenues from iron ore, 25% from their copper segment, which includes precious metals like silver, molybdenum, and gold. Petroleum, 6% of the revenues, and coal, 8% of the revenues, with some eliminations. As I was saying before, a pretty interesting distribution of revenues geographically. 65% of the revenues come from China, 8% from Japan, 5% from Australia themselves, 3% from India, 5% from South Korea, only about 2% from Europe, 6% from the rest of Asia, 4% from North America, negligible for South America and the rest of the world. Most of their assets being in Australia itself, with a decent amount in South America and some in North America. They have about $20 billion in debt versus $135 billion market cap. So it looks like their debt to equity ratio is going to be pretty reasonable once we actually get the numbers in for the adjustments to that to come through. So all we need to do is do the financial statements, and I will be playing their annual meeting as well as a conference that they had, because they're relatively short, both of them, while I do that.
Welcome to the BHP Group Limited Annual General Meeting. This is a virtual meeting, and BHP Group Limited shareholders will be able to participate and vote electronically. The Chair will join shortly and open the meeting. If you're logged in as a shareholder, a voting tab will automatically appear on your screen. You can choose to vote at any time during the meeting. There's no submit button. Your votes will be automatically recorded. However, you can make and change your votes at any time before the voting is closed. Shareholders can submit questions or comments now using the Questions tab on the information screen. Technical help for shareholders can be found at bhp.com/meetings. If we experience any technical difficulties throughout the meeting, please go to bhp.com/limited-AGM for updates.
This is a time of great opportunity for BHP. A time for us to demonstrate how the resources we produce will help solve some of the challenges the world is facing. Because what we produce is essential to the energy transition and global economic growth. Resources are fundamental to the way we live now and into the future. Resources will help those working tirelessly to solve climate change. They will help engineers realise the dream of cleaner, more efficient battery storage,
wait a minute, I didn't realize they had this like
and
this.
communications. As more copper is needed to meet the growth in renewable energies, more steel for our buildings and infrastructure, and more nickel for the batteries needed to power electric cars, we will help provide that too. BHP is not only uniquely placed to meet these challenges, we know we have a responsibility to do so. And we will do it without wavering from our commitment to social value. There is no easy route to the goal of a net zero world while meeting the essential needs and aspirations of its people, particularly in the developing world. But we are not a company seeking to do the easy thing. We are a company that focuses on doing the right thing. We want to be judged on our actions. We believe it's in the interests of our people, our business, our shareholders and our communities that BHP help lead in this challenge. Resources are fundamental to the way we live now and will live in the future. Now more than ever, providing them responsibly and sustainably is vital. And it's what we commit to in our purpose, to bring people and resources together to build a better world.
Ladies and gentlemen, my name is Ken McKenzie, and I'm your chair. Thank you for joining us today. I recognize this is a far different situation than we're all used to, and I regret that we cannot be meeting face-to-face in Australia or London as we normally do. But at the same time, I'm grateful that we can still connect, albeit virtually, at this important time of the year. I'm joined virtually by all of your directors, who are located in the UK, Switzerland, US, and of course Australia. We also have our auditors from Ernst & Young. I would firstly like to acknowledge the traditional owners on the land on which this annual general meeting is being held, the Wurundjeri people of the Kulin Nation, and pay my respects to their elders past, present, and emerging. There being a quorum present, I declare the meeting open and take the notice of meeting as read. I would now like to ask our Group General Counsel and Company Secretary, Caroline Cox, to outline the procedures for this virtual AGM. Caroline?
Thank you, Chair, and hello, everyone. My name is Caroline Cox, and I'm the Group General Counsel and Company Secretary of BHP. Today's meeting is being held virtually via the Lumi platform. This is the first time that BHP has conducted a virtual AGM, and for many of you, this may be your first virtual AGM as well. We have taken care to facilitate a positive experience for our shareholders. We engaged with the Australian Shareholders Association, the UK Shareholders Association, and ShareSoc, and took on board their feedback for the conduct of this meeting. We have also had regard to ASIC's guidance on virtual AGMs. I will now run through the procedural aspects of today's meeting. We have published on our website a guide to using Lumi, as well as answered a range of questions you may have. If you experience any technical issues, please refer to the help guide available on the meetings page of our website. In the unlikely event that we do experience any major technical issues, we will provide you with updates through our website and the exchanges. Voting today on all items will occur by poll, consistent with our Constitution. If you are eligible to vote as a shareholder of BHP Group Limited, a polling icon will appear. Selecting this icon will bring up a list of resolutions and present you with voting options. To cast your vote, simply select one of the options, for, against, or abstain. There's no need to press submit or click the enter button, as the vote is automatically recorded. You do, however, have the ability to change your vote up until the time that the chair declares that voting is closed. All votes cast today will be added to the votes cast by BHP Group plc shareholders. The total sum of votes will represent the final voting result for each item of business, and these results will be filed with the exchanges. Tim Hewen from Computershare has been appointed returning officer for the meeting and will scrutineer the vote. Turning now to the items of business. Items 1 to 22 in the notice of meeting are endorsed by your board, and the board recommends that you vote in favour of these items. Items 23 and 25 have been requisitioned by a group of shareholders in BHP Group Limited. Item 24 has been withdrawn. Item 23 is a special resolution seeking amendment to the Constitution of BHP Group Limited. Item 25 is an advisory resolution. Only if item 23 is passed will item 25 be valid. Items 23 and 25 are not endorsed by your board, and the board recommends that you vote against each of these items. Shareholders may make a comment or ask a question through the Lumi system. You do not need to wait until we get to the relevant item of business to do so, and I encourage you to submit your questions or comments now. To comment or ask a question via Lumi, press on the speech bubble icon. This will open a new screen. At the bottom of that screen, there is a section for you to type your question. Once you finish typing, please press the arrow symbol to send. We will ensure that there is a reasonable opportunity for shareholders as a whole to ask questions or make comments at this meeting. Please refer to the help guides on our website if you are having any difficulty in asking a question or making a comment or have any other question. Thank you, Chair.
Thank you, Caroline. We will do our best to get to as many of your questions and comments as possible. To ensure that shareholders have a reasonable opportunity to be heard at today's meeting, we will, as a guide, ask you to limit your questions or comments to 2. Questions should relate to the items of business under consideration at this AGM. I will now open the poll, and I will give you warning before I move to close the voting at the end of the meeting. At the end of the meeting, the proxies for all items will be displayed on your screens. Engaging with shareholders is one of the most important parts of my role as chairman. It's your feedback that truly sharpens our focus on what matters most. I've enjoyed these interactions over the last year, whether it be through retail forums or the meetings I've had with institutional investors all around the world. And I'm also pleased that we've found new ways to connect despite the challenges of the year. In fact, over the last 3 months, we've had an unprecedented amount of engagement with our shareholders. We've held 2 BHP Live events, a retail forum for UK shareholders, 2 sustainability roundtable sessions, 2 Indigenous Heritage roundtables, and a climate change briefing. This engagement has been invaluable. Thank you. When I spoke to you at our 2019 AGM, I said success is never assured, and we work in an uncertain world. Unfortunately, the past 12 months have demonstrated the extent of that uncertainty. Chile's been shaken by social unrest. Australia has been hit hard by bushfires. The COVID-19 pandemic has affected billions of people and changed our way of life. Most major economies other than China are in recession, leaving millions of people out of work. And there's been significant commodity price volatility. As I said, this is an uncertain world. But despite the global adversity, BHP performed solidly in the 2020 financial year. Earnings and cash flow were strong. Net debt was at the low end of our target range. Productivity was up. Unit costs were down. and we delivered $6.1 billion in dividends to shareholders. We also appointed Mike Henry as Chief Executive Officer, replacing Andrew Mackenzie, who retired as CEO on the 31st of December 2019. Under Andrew's leadership, BHP became a simpler and more disciplined company. We thank him for his vision and hard work, which has changed the way we operate and engage with the world. Mike Henry is a leader of integrity with exceptional standards and an uncompromising commitment to safety. He is a true professional with significant operational and commercial experience at BHP. And he has a deep passion for your company. And we'll hear from Mike shortly. This is a time of great opportunity for BHP. Because as great as the challenges the world is facing, we know the answer to many of them can be found in the very resources we produce. Our products are essential for global economic growth and the transition to a lower carbon world. We provide the materials that improve the lives of billions of people in developing nations and help engineers realize the dream of cleaner power, more efficient transportation, communications, and battery storage. This is what we do. This is BHP's guiding motivation, and it's why we proudly commit to our purpose: to bring people and resources together to build a better world. To bring people and resources together to build a better world. We have the confidence to deliver on this purpose because of our strong foundations. When I first spoke to you as chair in 2017, I detailed 5 priorities for the future of BHP: safety, portfolio, capital discipline, capability and culture, and social value. And these priorities have not changed. Safety is still our top priority. And I'm pleased that our total recordable injury frequency improved in 2020, and most importantly, we did not have any fatalities on our sites. We continue to sharpen our portfolio by focusing on future-facing commodities and assets that will deliver the greatest long-term value to shareholders. This is why we've strengthened our copper and nickel holdings and announced our intent to divest our interest in a number of coal assets whose value may be best realized outside of BHP. We remain relentless on capital discipline and will continue to be guided by our capital allocation framework. This helps us to direct capital between investments, the balance sheet, and cash returns to shareholders, such as dividends. We also keep building on one of our core strengths, the capability and culture of the company and its people. And at board level, this process continued over the year with a number of key appointments. Gary Goldberg has joined the board, bringing with him more than 35 years of global mining industry experience. And following the work we did on our skills and experience matrix in 2018, we identified an opportunity to enhance the technology expertise on our board. And as a result, in May, we announced the appointment of Dion Weisler and Xiaoqin Cleaver. Dion has extensive global executive experience, including as the President and Chief Executive Officer of HP Inc. Xiaoqin has over 20 years of global experience in technology, with a focus on software engineering, data and analytics, cybersecurity, and digitalization. And I'm also delighted to welcome Christine O'Reilly to the board this week. Christine will bring deep financial and public policy expertise, as well as valuable insights in large-scale capital projects and transformational strategy. Finally, I'd also like to acknowledge Lindsay Maxted and Shriti Vadira, both members of the board for more than 9 years. I thank Lindsay for his counsel and for his exceptional contribution to the board and as chair of the Risk and Audit Committee. Lindsay retired in September. And I also thank Shriti for her support to me as Senior Independent Director and her commitment to our shareholders. And she's made an outstanding contribution to BHP and is retiring after this AGM. Thank you, Lindsay and Shriti. When we get the first 4 priorities right, safety, portfolio, capital discipline, and capability and culture, we are a stronger, more focused, and more efficient company. But none of that matters if we fail in our 5th priority, to generate real social value in the countries and communities where we operate. In 2020, we invested almost $150 million in social value initiatives. This includes the Vital Resources Fund that we stood up to support regional Australian communities during the pandemic. We spent almost $2 billion on our local buying program, and we accelerated payments of $100 million to small, local, and Indigenous businesses when they needed it most. We also boosted our Indigenous workforce participation to 6.5% in Australia and 6.6% in Chile, exceeding our targets. And we paid $9 billion in taxes, royalties, and other payments to governments around the world, an effective tax rate of over 42%. At our last AGM, I said that our relationships with traditional owners are among the most important that BHP has. And recent industry events only reinforce that view. So I'd like to update you on our engagement with Indigenous communities.
Jesus, he's right. Look at that tax rate.
In Australia, BHP
Holy
has
crap.
continued our work with traditional owners, and more recently, the First Nations Heritage Protection Alliance, to build our shared
Taxation is
vision
theft.
for the future. Together, we've developed principles around Indigenous heritage in Australia, reaffirming our policy and commitment to free, prior, and informed consent in agreement making, and that regulatory regimes should respect and reflect this right. We've also set new aspirations for cultural heritage keeping places to even better advance traditional owners' values, culture, and pride. Places where artifacts can be stored and visited, and also places of knowledge, learning, and celebration of the unique living cultures that they're connected to. I want to acknowledge the traditional owners, Indigenous leaders, and Aboriginal land councils that have engaged with us. I look forward to our continuing partnership to deliver the commitments we have made together and our shared objectives. BHP's approach to social value shows up locally through our support of the communities where we operate, but also globally where we are actively addressing some of the world's most complex challenges, such as climate change. This is something that we have been addressing for decades. We are one of the first resource companies in the world to set targets for Scope 1 and 2 emissions, and last year we established a $400 million program to invest in low emissions technologies. We recently made a number of announcements that demonstrate the next step in responding to this challenge, because we know we have a responsibility to reduce emissions from our own operations and help communities and countries decarbonize their economies. We are acting on this responsibility. We have set out clear targets and goals based on thorough analysis and, most importantly, shared how we will deliver on these outcomes. There is no easy route to a net zero world, but BHP is committed to the Paris Agreement and the United Nations Sustainable Development Goals because it's good for business and our stakeholders. In conclusion, let me come back to uncertainty. The world may be uncertain, but many things at BHP are not. We are certain in the strength, resilience, and quality of our people who showed real purpose in 2020. We are certain that the resources we produce are essential. They are fundamental to the way we live now and into the future. They are crucial to economic development and critical to the transition to a lower carbon world. And we are confident that our disciplined focus on our core priorities will allow BHP to sustainably create value for the long term. Thank you, and I'll now hand over to your CEO, Mike Henry.
Thank you, Ken, and welcome to everyone joining us online today. It's hard to believe that it's been almost a year since I was announced as BHP's chief executive. It's an honor to be entrusted by the board and shareholders to lead this company. I've spent my whole career in the resources industry, and have been with BHP for almost 2 decades. Our refreshed purpose statement developed last year to bring people and resources together to build a better world perfectly talks to why I'm here. BHP is a company that is indeed steeped in history, but we're not constrained by it. As we've done for over a century now, we continue to evolve and lead for the times. We provide the resources that are essential to improving lives around the world. We support tens of thousands of direct jobs and many more through the business opportunities we create for others. Our operations provide the lifeblood for many regional communities, and young people are able to join us, grow their careers, and build lives for themselves and their loved ones. Our shareholders rely on the value we create and our consistent generation of strong cash returns. We do so supported by access to people, resources, and capital, your investment in us. BHP must be a company that governments and communities trust and where great people want to work. We must be a company investors are confident in and find attractive because we generate strong value and returns in the right way. My commitment to you is to lead in a way that ensures all of these are so. Our focus on social value will ensure that all stakeholders benefit from our existence and that communities trust in us. We will hire great people, invest in them, and have a culture that supports exceptional performance. And we will protect and grow shareholder value over the short, medium, and long term. This includes through the deliberateness we bring to how we shape our portfolio, to manage risk and maximize upside to the trends underway around us. Our strategy, portfolio, relationships, and team are strong. And this was evident in our results over the past year and in how we navigated the challenges that Ken spoke of. In spite of these challenges, we achieved a safe year with 0 fatalities in our operations and strong financial performance. This was possible because of the remarkable way in which people across BHP stepped up, and because of the support we were afforded by our host communities, governments, business partners, and traditional owners. We also sought to support those who rely on BHP. We shortened payment terms for small, local, and Indigenous suppliers. We provided new health and social funds in our host communities. And we created an additional 1,500 temporary jobs. In addition, the BHP Foundation is funding vaccine and treatment research. Our strong performance has resulted in a number of our operations achieving record production or throughput, and we achieved lower unit costs across all of our major assets. We produced strong operational cash flow, and through our disciplined application of our capital allocation framework, we concurrently invested in growth, maintained a strong balance sheet with net debt at the bottom of our range, and returned over $6 billion to shareholders for the 3rd year in a row, which included an additional amount of $1.5 billion over our minimum 50% payout ratio. We continue to stretch our performance and leadership on challenges the world is facing and that are important to BHP's long-term value creation and to our shareholders. We've demonstrated sector leadership in climate change action for over 2 decades. And as Ken mentioned, just last month, we announced our next series of commitments, including a 30% reduction in operational emissions in the next decade, on path to becoming net zero by 2050. We have recently made bold moves on renewable energy as well as on water stewardship, including a shift to 100% desalinated water and renewable power at our Escondida and Spence operations in Chile. We've grown female participation in our workforce by 2 percentage points in the past year to 26.5%, which is in the order of 50% higher than our peers. We continue to invest in Indigenous employment and grew representation in our workforce over the year. In Australia, the proportion of people who identify as Indigenous in BHP is now around twice that of society overall. We are looking to double the proportion of people who have permanent employment with BHP. And we have also recently announced funding and support for 3,500 new apprenticeships and training opportunities in Australia over the next 5 years. As we look to the future, we remain confident the world will continue to need the commodities we produce. However, we also recognize that the world is dynamic and changing. Global trends such as the electrification of transport, decarbonization of power, population growth, and rising standards of living are expected to drive demand for copper, nickel, and potash, future-facing commodities, even as growth in demand for iron ore, metallurgical coal, and oil and gas slows. And we are actively managing our portfolio to protect and grow value. This includes creating more options in future-facing commodities for long-term growth and tending to our current portfolio to maximize the value of our assets. Through our rigorous approach to capital allocation, we will create and secure more options through innovation, exploration, early-stage entry, and well-timed acquisitions of attractive resources and assets. We've already made some progress here, adding copper and nickel options to our portfolio earlier in the year, and we are progressing towards a final investment decision on our potash project in Canada next year. In terms of our existing portfolio, we recently announced steps to optimize our coal portfolio through focusing on high-quality hard coking coal and divesting our other coal operations. And as part of our balanced approach to investing in petroleum, we recently grew our working interest in our Shenzi operation in the Gulf of Mexico. But we also shared our intent to divest from more mature, later life assets, including our non-operated interest in the Bass Strait joint venture. As we shape our portfolio for the future, it is incredibly important that we deliver exceptional safety, operational, and financial performance. In the face of market uncertainty and slowing rates of growth in commodity demand, a greater proportion of value growth will come from an unrelenting focus on being great at what we do. We remain committed to the capital discipline we've demonstrated in recent years and will further build upon our technical and operational capability. The revised shape of the executive leadership team will bring operational and technical excellence to the fore, along with our focus on our portfolio and social value. In the near term, we expect that the global economy will take some time to stabilize and recover from COVID-19. Given the variable nature of the pace and structure of the recovery around the world, and exacerbated by global trade tensions, the outlook for commodity markets remains uncertain. However, the strength and consistency of the economic recovery underway in China does provide a measure of confidence and optimism. BHP's performance in the past year illustrates the resilience of our portfolio, balance sheet, people, and relationships. We are very well positioned to weather uncertainty and to emerge from COVID-19 stronger, faster paced, and more focused. So thank you. Thank you for the trust that you place in our company. These are deeply uncertain times for the world and are likely to continue for some time. The way our people have stepped up to meet these challenges has been truly inspiring. Their leadership and dynamism, with support from our valued relationships, has enabled us to deliver a year that was safer, lower cost, and with strong returns. As the world rebuilds and aspires to a more sustainable future, BHP will continue to evolve and lead the industry in a way that grows value and returns for you, our shareholders, indeed for all our stakeholders. Thank you again for your interest and continued support for our company.
At the end of the AGM was. Okay. I'm gonna listen to this conference over.
What should the world expect from a bank? Perhaps a bank dedicated to meeting the challenge of change.
Wow.
A bank that honors the business environment and the natural environment with equal passion.
Aww.
Providing people and businesses the tools and insights they need to succeed. And offering people and communities the resources to flourish. A bank that recognizes that economies fluctuate, but values don't. And never forgetting, our only ambition is to help you fulfill yours.
Feels.
What would you like the power to do?
Good morning, everybody. Welcome to the first session of our 38th Annual Global Metals, Mining and Steel Conference. I'm Jason Fairclough. I run Metals and Mining for Bank of America here in Europe and EMEA. I'm joined today by my colleague James Redfern, who's head of Australia Resources Research. We work together covering the dual-listed miners, so BHP and Rio. So first, this is our second year doing this conference virtually. We're certainly hoping it is the last. And I would really like to thank the companies and our investor clients for supporting us through this challenging period. We do have around 1,000 people signed up for this conference. We're very pleased with the participation. Now, on behalf of James and myself, we're very pleased to introduce and welcome our first CEO speaker, Mike Henry from BHP. Mike is a very seasoned mining executive. He's held many different senior positions at BHP before being appointed as CEO last year. I'll just explain the format for everyone's benefit. Mike will be making some opening comments with a few slides, and then we'll move to our fireside chat discussion. There's an opportunity to ask questions via the Veracast panel. If you have questions, feel free to add it using the same system that you've used to log in. James and I will see those questions and we'll try to work them into the discussion. With that, we'll invite Mike to make his opening remarks. Mike, over to you.
Well, thank you, Jason. It's great to have the opportunity to join you again, although I have to agree with you, next year, hopefully it's in person. Just before I turn to the main topics I'm going to speak to today, I did want to start by saying just how pleased I am with how the company is performing. We're safer, delivering more reliable performance, and this, coupled with the quality of our assets and our disciplined cost control, is allowing us to secure maximum benefit from the record high iron ore and copper prices that we're seeing currently. We've delivered a number of major projects in the past 12 months. The 185,000 ton per annum expansion at the Spence copper asset, Atlantis Phase 3 in the Ruby project in petroleum, and in the next few days, we will announce first production at the 80 million ton per annum South Flank iron ore project with its higher grade and lump fraction, all brought in, I might say, on time and on budget in spite of COVID-19, and perfectly timed given where copper and iron ore prices are at. Now, we had the counter-cyclical acquisition of an extra stake in the Shenzi asset in petroleum as well, and we've secured more exploration partnerships and early-stage growth opportunities in copper and nickel. And finally, we've made market progress on our efforts to reduce operational emissions and have signed a number of partnerships with others in the value chain targeted at reducing Scope 3 emissions. So overall, the company is really going well at the moment. Now, building upon this strong near-term performance, though, today I do want to talk about two things. Firstly, the critical need for resources in meeting the world's decarbonization challenge and to support global economic growth and development. And secondly, BHP's commitment to playing a leading role in ensuring that these demands get met sustainably. We are optimistic for the future. We believe the world can both decarbonize and achieve the higher living standards that people aspire to. And we're at the center of both of these aims. Recent times have seen greater uncertainty and volatility in markets and geopolitics, and growing expectations on the part of shareholders, communities, and broader society. In addition, there's increasing technical and financial challenges in finding and developing the fresh supply required in some commodities. Successful companies will be those with a clear strategy and sense of purpose, who are exceptional operators and allocators of capital, and who are in tune with the changing world around them, and then who focus on bringing all this together to create long-term value for all their stakeholders. This is BHP. We have built the organizational capability, relationships, and balance sheet strength to allow us to thrive in this environment. The outlook for our commodities is compelling. Government stimulus and pro-growth agendas, which we do expect are going to remain in place for an extended period, are anticipated to lead to robust growth, a lift in inflation, and solid demand for mineral resources and oil and gas. And this is occurring at a time when our industry's capital discipline and decline in exploration success over a number of years now means that there's fewer high-quality growth projects in the industry pipeline to meet this demand. The drive to more rapidly decarbonize the globe may also accelerate demand for many of the products that we produce. A growing number of governments are committing to tackling climate change with greater ambition and are cooperating to do so. A transition to a world where warming is limited to no more than 1.5 degrees above pre-industrial levels is positive for BHP and would allow us to create significant value. In a Paris-aligned scenario, we expect a more than doubling of the amount of primary copper and a quadrupling of the amount of primary nickel demand over the next 30 years, as was produced over the last 30. Demand for steel will almost double on this basis, and potash will be vital for more efficient agricultural practices. And as a shift to cleaner energy sources occurs, the world will still need oil and gas to power mobility and everyday life on its pathway to decarbonization. So the world is going to need more supply of some commodities in order to continue to grow and to make the transition to cleaner energy. The level of global effort, innovation, and coordination to limit warming to 1.5 degrees is massive. However, the commitment and intention for the future is becoming clearer. At BHP, for over 130 years, we've been reliably providing our customers with high-quality supply of the commodities they need for the world to grow, and for the world to grow. Like our purpose says, we have been bringing people and resources together to build a better world. Now, the world is continuing to evolve, and it's doing so in a way that plays to BHP's strengths. We're running our operations exceptionally well. We're safer, more reliable, and more productive than ever before. We've now had almost 2.5 years fatality-free, an exceptional result. And our two largest assets, Western Australian iron ore and our Escondida copper mine, have continued to set production and throughput records while delivering excellent cost performance. We remain hungry to improve. We've redoubled our focus on becoming even safer. We are systematically unlocking even greater performance from our equipment and infrastructure. And we're enabling our people and are investing in capability, be it in trade skills through our Future Fit Academy and Operations Services, or technical skills through our Centers of Excellence. And we're underpinning this by ensuring we have an inclusive and diverse workforce. Our portfolio is well positioned. We produce commodities essential to everyday life, global economic growth, and the energy transition. Around 60% of our production is in commodities that support steelmaking, which we anticipate will see strong demand as the world decarbonizes. Around 1/4 of our portfolio is currently in future-facing commodities, which for us are copper, nickel, and potash, and we expect to grow this over the coming years. This includes an increase in average copper production over the next 5 years of more than 300,000 tons per annum, equivalent to adding another Spence to the portfolio. Given our rock-solid foundations of a strong balance sheet and disciplined approach to capital allocation, we are positioned well to be able to continue to pursue new opportunities for growth. As we've done for over a century, we will continue to meet the world's changing and growing demand for commodities. There is still an obvious tension between the world's need for more resources and the need to make the world more sustainable, both for people and for the environment. And it's essential that both are achieved. Growing demand must be met ever more sustainably, and this requires alignment between resources companies like BHP, investors, and society on how best to navigate this tension. Better alignment will enable the transition to be achieved more sustainably, quickly, and cost-effectively. Conversely, a lack of alignment will result in poorer sustainability outcomes and slower and more costly progress on the energy transition. BHP is committed to continuing to create value for shareholders and all of its stakeholders. We will continue to demonstrate leadership on sustainability, including on climate change. And we've been taking real action on climate change for decades. Most of our assets are already at the lower end of the respective emissions intensity curves, and we are working to lower them further, consistent with our commitment to reduce operational emissions by at least 30% by 2030 and to be net zero by 2050. A number of our assets are on the way to having a substantial portion or even all of their electricity provided by renewables. Beyond greening our electricity supplies, we will decarbonize our mining equipment through displacing diesel. Now, this is a much more complex task, but we are partnering with industry and equipment manufacturers to drive this transition. Outside our operations, we're working with others in our value chain to develop solutions for hard-to-abate emissions. For example, we're working with some of the world's leading steelmakers and with technology startups to identify pathways and develop technologies to reduce steelmaking emissions. Over the past 6 months, we have established partnerships with 3 major steelmakers in China and Japan, whose combined output equates to around 10% of global steel production, more than that produced in all of Europe. And as one of the world's largest bulk freight charters, we are working with the maritime industry to support greener freight. We've pioneered the world's first tender for LNG-fueled bulk carriers. We've successfully completed a trial of marine biofuels. And just last month, we were the only resources company to become a founding member of the Maritime Decarbonization Center to be set up in Singapore. These actions are aligned with our commitment to addressing climate change by reducing our own emissions and by working with partners to reduce emissions in the value chains in which we operate. We believe the future is increasingly clear, and our strategy, portfolio, capabilities, and approach to social value position us to play an important role in meeting the twin objectives of an accelerated energy transition and continued economic development and improvement in living standards. We're committed to doing so sustainably, and we're well placed to generate great returns and value for shareholders and to support others to grow and prosper. Thank you, Jason, and back to you.
That's great, Mike. Thanks for those opening remarks. So now we have our fireside chat, and just to remind everyone, audience members can ask questions via the Veracast panel, and James and I will try to work those in. We do have a couple of pre-prepared questions, so let's start with just a couple of those. Mike, maybe a bit of an obvious question, but sometimes obvious is good. So BHP is the largest mining company in the world, enterprise value approaching $200 billion. As a CEO, this must bring some special challenges in terms of management, but also in terms of capital allocation. Can you give us a little bit of context here and talk about how you and the organization address this?
Well, sure, Jason. So let me just start by just saying again that I think in the current environment, we do have a number of very strong advantages that give us the edge. And some of those accrue as a result of scale. But of course, scale does bring with it its own unique challenges, as you put around management and around capital allocation. The way I put it is they're different challenges, not necessarily greater, but different. Now, how do we seek to deal with that? Is, well, first of all, by having a very clear winning strategy and sticking to it. So everybody's focused on that winning strategy. Second of all is that we prize simplicity. So as a means of ensuring that scale doesn't lead to unnecessary complexity, we really do prize simplicity, and that is in portfolio, processes, our corporate structure. We're focused on simplicity, and in the case of portfolio, the one thing I would draw your attention to is that whilst we're big, that scale comes from a relatively small number of very large, very high quality assets in relatively few commodities and relatively few geographies. Now, in addition to that, we've focused on building capability and culture to allow us to drive performance at pace, and I think you've seen us demonstrating that in over a number of periods now. And so it's that combination of how we think about the organization, how we think about capability and culture that allows us to continue to drive value. Now, the final one that I get on the table is just the old chestnut. Do companies get to a point where they're too big to grow? I've spoken about the case for BHP actually having some clear advantages in our ability to secure opportunities to meet the world's need for the commodities to support the transition. First focus is, of course, on driving even greater value out of our current assets, and you've seen us doing that, again, for multiple periods now through productivity, but also through executing very well the options that we have in the portfolio, brownfield and greenfield. But there's more to do. We want to replenish the cupboard of options for the future. We've had the benefit of the work of previous generations of management in terms of the options they've created for us. We now want to replenish that cupboard for the future, and specifically in the future-facing commodities.
Thanks, Mike. It's James here. Mike, you talked about a potential pivot to future-facing commodities, BHP being copper, nickel, and potentially potash. How do you think about your optionality in copper and nickel? Do you have any shovel-ready projects? And also in copper specifically, do you have growth options, as many investors and the world globally is crying out for more copper? Thank you.
Well, so James, again, we want more. We've made this a clear area of focus, but and the way I would put it is probably I don't know if I'd term it a pivot. It's more an upweighting in future-facing commodities. But I would just again point out that we're already the world's third largest copper producer, fourth largest producer of Class 1 nickel, and we've got roughly 20% growth, or just over 300,000 tons per annum growth coming in copper production over the next 5 years, because of the efforts we've had underway to stabilize smelter operations at Olympic Dam, obviously the Spence growth option coming on, and then the growth that we'll have at Escondida, in part because of some higher grade, but we'll achieve the 1.2 million tons per annum average production over the next 5 years at Escondida. So some solid growth ahead of us, but we need to create more options. Now, how are we going to go about doing that? Well, first focus is on bringing innovation to bear on being able to economically recover more of the resource that we already have in place, because we have lots of copper, we have lots of nickel. If we can bring innovation to bear on how we go about unlocking more of those resources, that's first prize for us. But we're also increasing our effort in exploration. In early stage entry, we've had some reasonable success over the past 12 months on securing more partnerships and on increasing our exploration effort in a number of geographies, both in nickel and in copper. And then, of course, in addition to exploration and early stage entry, we remain present to the possibility in future for the right assets at the right point in the cycle to acquisitions as well. But very strong focus on exploration, early stage entry, and innovation.
Thanks, Mike. Maybe I'll take the next question here. So we'll talk a little bit about ESG, and then I've also had a question that's come in on the Veracast panel, so I'll see if I can work that one in. So if we talk about ESG, the S, the social, always feels a little bit more nebulous than some of the other criteria. So almost 2 years ago, you outlined your approach to social value. Can you just summarize what this is? And I guess the question from Veracast is, we look at what's happening in Chile, we look at what's happening in Peru. Again, how do you think about this in terms of the potential impact on your business? How do you manage this?
Okay, well, look, great questions, and it's an interesting one, isn't it, Jason? Because you opened up with the S is a bit more nebulous, which I would kind of agree that it can be seen that way, and yet it's paradoxically the one that is most pervasive in everything that we do, and it's really that notion that every decision that we take, every action that we take, has an impact on those around us, and through the way that we go about our work, we can do a better or less good job of generating opportunity and creating value for others. And it's really this overarching concept that's led us to the shift from social license, which I think some people are, perhaps it brings a bit of a connotation with it of the minimum necessary, to the concept of social value, which, as I said, is really about understanding that every action that we take, the how that we go about our business, if we're thoughtful and deliberate about that, we can actually create more opportunity and more value for a wider range of stakeholders, all those who have a stake in BHP's success. Now, in order to do that, we need to ensure that concept permeates right throughout the organization, and everybody has it in their mind when they're executing their daily business. Now, what you see playing out, and yes, it's kind of in stark relief in Chile and Peru, but globally, this sense of people wanting what they see as a fair share, and having aspirations, and there's a role for corporates in thinking about how we can go about prosecuting our business in a way that creates more opportunity for more stakeholders. And so it's perfectly aligned with the notion of social value and the way that we've embedded it. Now, there will be specific things. We have to see how Chile plays out, obviously. We're still hopeful that that's going to proceed down a path where people understand the importance of maintaining stability and the importance of being able to attract capital, because, of course, Chile has fantastic copper resources. But for there to be ongoing investment into the country, the fiscal settings have to be attractive. But that attraction needs to be seen in its broadest sense, including in the way that companies contribute back into society through the jobs they create, through the contributions they make into communities, through the opportunities they provide for other businesses. And again, that's something where we believe we do make a big contribution there, but there's more to do, as is seen in our social value agenda.
Hi, Mike. James again. Can we please talk about Jansen? So potash is one of BHP's future-facing commodities. Around about $5 billion of capex has been sunk to date at Jansen. You've already mentioned that the project will be presided over by the board in the middle of this calendar year. Can you please tell us what your thinking is around Jansen in terms of the project going ahead this year, potential sell down to a JV partner, and I guess how you're thinking about the supply demand balance for potash in the medium to long term. Thank you.
Okay, thanks, James. Well, look, I'll start by saying that the thinking really hasn't changed. We, you know, if I talk about the commodity, how we see it, the project, and then the decision, we continue to like potash. We think that the long-term demand and supply fundamentals for potash as a commodity are attractive. Potash demand will be driven by ongoing population growth, increase in living standards, even the stronger push to decarbonize and green the global economy. We believe it's going to be positive for potash. And then on the supply side of the equation, notwithstanding the near-term market dynamics, we do believe, and that's a reasonably widely held view, that new greenfield capacity is going to be required in the market towards the end of this decade, early next decade. And of course, Canada has the world's best resources of undeveloped or greenfields potash, and we have the most attractive of those assets with the Jansen project. So we like the commodity. In terms of the project itself, then, I'll start by saying we don't like the amount of capital that we've invested in the project to date without having a project and first production. But we are where we are. We're making sure that we've learned the lessons from that. But I now look at the project going forward, and I've spent time getting behind the project to make sure we understand it. We're finalizing some of the project study parameters. We still have to secure the port option, or the port and route to market. But we'll then be bringing all of that together with a decision to be made middle of this calendar year, so in coming months, as to whether or not we want to proceed with Jansen stage 1. And that, of course, will be made against the very disciplined approach that we have to capital allocation. And we'll ensure if the project is to proceed, it needs to be able to demonstrate that it's got the right value and returns relative to the risk. Now, you did also ask, James, or you had in there the question around a sell down to a JV partner. And we've always said, we're open to partnering. But the project doesn't need a partner to proceed. So the key things that they're required for the project is to get the project studies finalized, get the project or the port option sorted, and then we can make a call as to whether we carry it forward to the board for a investment decision.
Thank you.
Okay, thanks, Mike. So a bit of a portfolio question, and I have had a couple of questions come in on the Veracast system as well, asking about coal and oil and their place in the portfolio. But you have been exploring options to exit thermal coal, both in Australia and eventually in Colombia. Looks like you may also consider exiting some of your lower quality coking coal assets. But so far, you're not committing to a wholesale exit of hydrocarbons. You're keeping the higher quality coking coal. You're also maintaining some presence in petroleum. So how do you think about the impact of these hydrocarbons in your stock market valuation? And then I guess beyond that, if we think about met coal as, let's say, a gradually declining market at some point, how do you run a business that's feeding into something that ultimately should be shrinking?
Okay, so interesting questions, Jason. Let me talk first about met coal, because that kind of sets the scene for the decisions we've taken around thermal coal and a certain segment of met coal. And then I'll come back to the broader question around multiples and so on. So in the case of, there clearly at some point there's going to be a decarbonization of the steel industry. The world needs that to happen for the world to meet to overcome the climate challenge and to become net zero by 2050 or in due course. But within that, there's easier to abate emissions and harder to abate emissions. And the emissions from steelmaking or blast furnace steelmaking are fit into the harder to abate category. So there's lots of effort underway to develop technologies to enable the decarbonization of steel. But those technologies still, many of them still aren't economic. They're still nascent in terms of their development curve. We're participating in some of them. You know, the steelmaking partnerships that I mentioned earlier are focused on decarbonization of steel. We've invested in some startups that are focused on even more leading edge technologies, but these things will take time to play out. And so for the foreseeable future, for decades hence, coking coal is still going to be needed for steelmaking. However, the steelmakers have the challenge of reducing their emissions footprint. We believe that they'll be taking some action, be it hydrogen injection into the blast furnace or simply improving blast furnace utilization to reduce emissions intensity. We believe that they'll be prioritizing those sorts of activities in the near term. Against that backdrop, then, the higher quality hard coking coals that enable higher blast furnace utilization, for example, we believe are going to remain in strong demand and are likely to attract an even greater premium relative to lower quality coals. And so that means that in the BHP portfolio, where we've got, you know, thermal coal, less high quality hard coking coal, the premium hard coking coals, that the part of the portfolio that will attract ongoing capital investment will be the high quality, the premium coking coals. Therefore, we won't unlock the true value of the other assets within the BHP portfolio, and that's what sat behind our decision to divest New South Wales Energy Coal, our stake in Cerrejón, and BMC that we announced last year. Now, recognizing
so now we're 2/3 done.
The nature of the process that needs to play out, we spoke about 2 years to complete that, and so we're still in that process. Now, if I come back then to the question around how do we think about impact on multiples and so on, look, at the end of the day, our first focus must be on intrinsic value. How do we unlock best value for shareholders and high returns? And we can't make all of our decisions based upon latest investor views or sentiment, albeit we can't ignore it either. So it's clearly a factor that we take into account, even as we make the first focus intrinsic value. Now, we will make whatever decision we believe is going to give rise to the greatest value for the shareholders for any commodity in the portfolio. And so we constantly review the portfolio and what the best way of generating value for shareholders is.
Okay, thanks very much for that, Mike. Well, look, I'm wary here of going over time, so I think we might need to round it up there. And as ever, I think we could chat all day, but some really interesting discussion points there. Thank you very much for your time spent with us today. Thanks very much for presenting to us and being so patient with all these questions. All right.
Okay.
Hope to see you in person next year, Mike. Yeah.
Let's hope so.
Thanks, everybody. And we're going to wrap up the BHP session now. We'll see you in 10 minutes for Rio Tinto. Okay. Thanks very much.
Thank you. Bye-bye.
Bye.
A little hint there of what I might be doing next. Anyway, so we're still working, but here's to go. Kind of got sidetracked there in the middle of it. It's like, it took me longer to get started because their financial statements are a little weird compared to more typically US styled ones, which you see that happens when you go overseas. As well as I kind of got caught up in the middle there trying to make an estimation of their amortizable life, which I generally have to do something a little bit more custom for commodity companies and pharmaceutical companies and other companies that have intangibles that you can give like a more specified timeline to relative to other companies. So I had a little something I kind of had to handle there in the middle, which is good now. Which, basically what we did, took a look at their depreciation rates, their overall exploration cost rates, and then overall total net asset value of their reserve assets, and finding out over an average depreciable, exploratable lifetime of how many years worth of total supplies it seems like they have on hand, based on average, based off of that amortizable life. Now, this assumes that they stop exploring basically outright. So they basically just stopped exploring outright and only used the resources they had on hand. They'd have 3.8 years worth of resources across the board, seems like, which is smaller than the 5 number that I use as kind of like a baseline for R&D amortizable life. Most commodity companies, it seems like, usually a little bit higher than that. It's interesting they're running that lean, I guess you could say, but which has positive and negative effects. It depends on where those costs are going versus other things at the given time versus where they are in the past. We'll see where that ends up at the end of the day, because it can kind of show itself in a few different weird ways. But we're going to continue because, like I said, we're still in 2 years left. So effect on working capital, cash flow. CapEx. Financing. Two shares. And dividends. Down too far. Cash equivalents. Trade receivables. Inventories. Everything else current. Property, plant, equipment. Intangibles. Non-current receivables and others. Inventories and investments. Tax assets. Bearing. Payables including taxes. Other including partitions. Interest-bearing liabilities. Tax liabilities. And everything else. Now on to equity. All right, 2 years to go. All right, there's the income statement. Now, cash flows. Shares. Dividends. Okay. Now the balance sheet. Like once you get in the groove of it, you can really fly through these things. It's just a matter of figuring out the way that each individual company orders it. So it's like the first few years always takes me so much time, and I'm also like half trying to listen. So that's the other thing, is like once the call's over, you can also focus a little bit harder. You can really fly through these things once you know where everything goes. There. Intangibles, property, plant, equipment, 1950 for currents. So that was the problem. Receivables. Oh no, probably not. There's there we go. Payables, including taxes. And then equity, share capital, excess capital, attainment, treasury, non-controlled. All right, now we can move on to the final here. Financial income, financial expenses, taxes, interest. Appreciation, disposal of assets, why this is negative, change in assets, capex, including intangibles, net debt repayment, includes issuance of new shares, which we then net out. And then dividends are paid. And the balance sheet, cash and equivalents, receivables, inventories, everything else. Missing something there. Receivables, assets, inventories, tax assets, other. There we go. Interest-bearing liabilities, payables, plus taxes. Need to learn to lean back more. Debt, tax liabilities. Everything else. Now the share capital. All right, there we go. We finally got to all 10 of our years. We can finally start taking a look and doing some stuff. Curious why it's coming through like this. Oh, probably because yes, I still need to put the revenue correlation in. Okay, that's why. 3021. Hold on. 4 transfer 5. Okay, so that is set up on those dates. Correct. Those. Okay. Okay, so there we go. The price of BHP and the price of iron ore have an 83% correlation. The correlation between the revenues, hold up 1 minute, we can actually add to that. Forgot, we have a few more years of revenue, which is why we have these extra years on the end here. 73 that's 32. Oh, that's right, because it was the weird combination. I'm sitting here like, what? Where's the 73? It's because it's this one. I forgot this weird and strange. They can't just like list the revenue correctly. Yeah. Okay. We're going to do it like this. This. For that, we have just the number that we grabbed. Okay, so that's actually the total array we have. W. Okay, so the correlation between iron ore price and the revenues is only about 70%, which isn't as good as an 83%. 83% is pretty good for the price correlation. However, 70% on an absolute basis is still pretty good correlation. And the revenue correlation is more useful to us than the price correlation, but it's nice that we have a price correlation as well. Based off the price correlation, we would expect the price of BHP to be 57.05 based off the current price of iron ore. So that's a little bit bullish right off the bat. Right here, 7% upside from that point. So we can get into the rest of the stuff. Why is this spitting it out weird like this? Hold on. Technicals U29. U29, C32. Oh, well, we still have other things to set up, that's why. But I forget, there's a lot of things to set up here. So now we have those, we have to set up the quartiles because we have to set up 5 quartiles, but unfortunately we only have a count of 13, so we kind of have to make an estimate of where the quartile points are with like this being the middle quartile, for example. The projected price. Oh, like, why is this going through like that? Okay. Now this should be coming in, and 30, 67, 82, 131, 176. Okay, so those are our projected iron prices. Also analyst price of 65, which is the projected analyst price. So about approximately 31, 65, 67, 82, 131, 176 are our iron ore prices. That gets us outputs for revenues in these numbers right here, which gets us potential capital ratios and margins as well, but I'm not as tied to those ones. Those ones we can kind of play with a little bit, but that either way. So that gets us those projected revenues. Hold on, 4466, 4466. Okay, so basically these numbers right here are completely irrelevant. You can kind of just ignore them, so you can change them all you want. It doesn't actually change anything because they're not actually tied there. This number is coming from this page. These are the revenue progress. So basically we're seeing declines in iron prices basically across the board. That seems to be what we expect based off of the correlations that we've done. It's just a question of how much and at what margin they'll be able to maintain and all the other factors, which we have to get into because probably have too much debt on them. Yeah, 45% debt's way too much. They're at 15% right here, so maybe 30% is potential for that. We can just assume they stay in the same debt range there. That gives us an output of 15%. That's pretty good. That improved their situation a little bit, not a lot, but we'll get to that. They do have a pretty decently sized beta once it's levered up, even though they have low leverage, and that's because of the industry that they're in. And the high tax rate does help protect them a little bit as well, because they definitely have one hell of a high tax rate. Getting a 5 to 6% interest rate and tax rate about 40%. Book interest rate that we have for them is about 7%, so they're doing a little bit better on that front. We do need to boost their the margins a bit. Well, it's going to be a wide range because of the revenue range, but we'll get to that. Because we also have sales to capital ratio, which doesn't look like it's doing terrible. In fact, we're probably doing them too much of a favor as far as that goes. They've had definitely some low sales to capital ratio, but that's also going to kind of vary wildly. So we'll see. So our revenue projections vary approximately 60-70% upward from the low end on to the high end, which for our capital ratios giving us possible tripling in that kind of range, which I was looking at 0.25 to 1.25 or something like that, which 0.25 to 1.5. I feel pretty comfortable with that, actually. Probably going to lower this though to 0.75, which lowers the expected to 0.85, currently at 0.8. Maybe this should go to 1.25. Put some of the 0.75. Yeah, I'm comfortable with that. Then for margins, we get a suggested 5% to 28% range. Yeah, more like that. Let's see. What am I forgetting? Is there anything other than defaults? But we'll get to that. I feel like there must be. I mean, I know that the revenue projection is very rough, so it's like I know that's part of the reason. But even on the positive revenue projection story with a whole lot of really good factors going for it, it still doesn't generate quite the level of value that we're seeing on the price, which doesn't mean anything. Could be it's just extremely overvalued, but generally speaking, if there's that large of a discrepancy, I ask the question, what am I screwing up, But I don't think I am screwing anything up here, so. Yeah, because I mean, I still get also about 15% return on invested capital versus about 16% for the average of the last 3 years. So, I mean, capital levels don't seem to be going crazily in one direction or another. Oh, I don't know. It looks like that's just is what it is. It doesn't seem like there's a lot you can do. It looks like the revenues are just shot to hell. Jumping up the revenues ultra significantly. Giving them a good sales to capital ratio and paying for a lot of it with debt still doesn't solve the problem. Yep, this is just a total mess, it looks like to me. Okay, well, it is what it is. This one's terrible. Hugely overvalued. I don't understand. Don't know what to say about that. And I mean, like I said, even if I just switch all of the assumptions around to work out in its favor, it really doesn't seem to be giving me anything that makes sense for valuation. So I don't know why people have bought it up to this level. I don't know how this can be missed, but it literally just doesn't even seem. I don't know. I don't know. Anyway, we'll do the default risk. Call it a day. All right, so BHP Group, ticker BHP. U.S. Treasuries currently going for 1.52%. Equity risk premium is currently about 5.04%. I get a discount rate after adjusting for risks of this company of 10.11%. They have a 7.5% dividend. That's an estimation based off of their previous non-special dividend, because they did have a special dividend in the most recent half period. Sales 5 years ago of $31 billion. Sales in the most recent year of $61 billion. Their sales to capital ratio is currently at 0.8 with returns of invested capital of 16.46%. Debt to equity ratio of about 15%. Their default risk is pretty negligible, pretty much as close to zero as you can get without being zero. Profit margins currently about 18%. Profit in the most recent year of $11.3 billion, and they're currently selling for $53.36. The probability distribution we have for them is perfectly even across the board because we're using our commodity pricing model. In that pricing model, we're pricing iron ore as their main revenue source, which gets us iron ore projected prices of anywhere from $31 to $177 in 5 years from now, with an expected value of $92. That gives sales in the 5-year forward period of anywhere from $38.1 billion to possibly $66 billion, which gets sales CAGRs for the next 5 years of anywhere from -9% to 1.5%. Expected basis negative 4.3%. Their sales to capital ratio, we have expectations of it going down a little bit because it's been raised for the most recent year. So we're assuming maybe about 0.76, with a return on invested capital of about 15%, which is a little bit lower than the most recent year, but also has been elevated in the most recent years. Debt to equity ratio, we're expecting about 15%. And the default risk we are expecting to be less than 1%, so pretty low, pretty negligible, which is very, very weird and shocking considering the rest of their valuation. Because based off the discount rate that we get, we evaluate them to have a present value of $13.66, which is 74% overvalued. And 5-year forward value targets, unadjusted for the dividends paid out, we are seeing anywhere from $11.10 to $40.67. On an expected basis, $22.13, which, based off the current price, gets an expected return of negative 16% per year for the next 5 years, which is horrible. Short-term pricing metrics, however, show it to be undervalued on most multiple bases, including the commodity direct correlation pricing, which would suggest that perhaps based off of the iron price, it should still be 7% higher. So this has definitely been one very fascinating and confusing result, considering on the face of it, it definitely looks extraordinarily cheap, but they just have too many shares, capital is too expensive, they just don't get high enough margins, and the revenues are just not going in the right direction, so pretty much nothing looks good for them. So either way, yeah, that's going to do it for us today. We're already have preparations for basically the next several evaluations. I've got like a list of companies we're going down. Kind of work through a lot of the top contenders on our previous value screening thing, but I've been using a third-party global screener, which I came up with another set of lists of foreign companies. This was sort of the first one of which we're going to look at on Wednesday. I'm taking a look at ICICI Bank or ICICI or whatever, I don't even know, ticker IBN, Indian financial company. So that's what we're trying to look at next on Wednesday. So I will